Good evening and welcome to this evening's webinar, everyone. I'm just going to let a few more people come in there. Got quite a few people joining us tonight. This is our second webinar for Sydney Angels for the day. Right, we'll get started and people come in. So good evening. Thank you very much for joining us on the webinar today. My name is Jason Kennewell. I'm the investment director here at VentureCrowd. Today's webinar is very much around a portfolio update of the existing companies that the fund has invested in to date. We originally did intend to run this webinar purely as an investor update for all the existing LPs in the fund to update them on the portfolio. However, we've also had quite a bit of interest from prospective investors that wish to join the webinar to gain further insights in the companies that the fund has invested in to date. We felt it was a good way for them to get a feel for the type of companies that the fund is investing in. So we're happy to open it up to both audiences this evening. On today's webinar, I have with me Sydney Angels Sidecar Fund 3 Investment Committee member Adrian Bunter. For those of you that don't know, Adrian is an experienced angel investor, professional advisor and non-executive director with over 30 years experience. He's also a partner of Modus Partners Australia, a boutique specialist corporate advisory firm. If you'd like to ask questions during the presentation, there is a Q&A button at the bottom. Please feel free to drop them in. We will leave plenty of time at the end. We're looking to try to keep to 30 minutes if we can. So we'll leave some time for questions and answers at the end. I am also recording this webinar as well, so we will share that recording with you. And please feel free, if you wish to share the recording with anybody that you think might be interested in an investment in the fund, feel free to share that with them. With that, I'll hand over to you, Adrian.
Thanks, Jason. I think that 30-minute notification was to me to make sure I don't spend too long on this. Might just jump in and go to the next slide. Because there's some new people on this who aren't familiar with the sidecar fund, I'll just go through a reasonably high level about it. A lot of people ask us what are they actually investing in because they don't understand what the fund actually is as a limited partnership. You can see in this diagram on the right-hand side, you've got the fund manager, which is VentureCrowd SASF3 Proprietary Limited, who sort of runs and makes the decisions. That's got an investment committee combined of some Sydney Angels members and some VentureCrowd members. And then each of the people come in as an investor as what's called a limited partner. So the way to think about this is similar to a shareholder or similar to a unit holder, but it's a partnership interest which things flow through. The early stage venture capital limited partnership is a terrible name, but a wonderful structure, especially due to recent CGT changes. And what this lets us do once we've got our full unconditional approval, once we get to the $10 million fully raised, is investors will receive a 10% tax offset on the investments they make in the fund. And it's important that people realize that that's an actual tax saving. It's not a tax deduction. So if you were to invest $100,000, say, for example, in the year and you got a 10% offset, $10,000 would come off your actual tax bill as opposed to, say, getting a deduction for the $10,000. But the most beneficial thing about it is all of the returns that come out of the fund are tax-free, whether or not that be dividends or other income distributions or capital gains, 100% tax-free for the investors in the fund. Especially valuable given the recent effectively doubling of capital gains taxes in Australia. The other thing that's a little bit different from this fund compared to lots of other VC funds is that a lot of other VC funds have a minimum investment requirement of $250,000, which is about $50,000 a year for 5 years. One of the things we've done with Sydney Angels and why we partnered with VentureCrowd is we wanted to lower the entry point to democratise effectively the ability for people to access the sidecar fund. So we have a $25,000 minimum, which is called in $5,000 tranches. If you did $50,000, it'd be $10,000 tranches, example, over that 5-year period. There is technically, because we're already investing, an ability, the fund is supposed to charge a 10% premium for people who are coming in late to the fund, and that goes to earlier investors to reward those early investors for coming in early. But the fund manager, and we've elected to waive that premium until the time we hit $10 million. So as soon as we've hit $10 million, that premium will come back on, and any later investors will have to pay that extra cost, basically as a reward to the early investor for setting up the fund earlier. Go to the next slide, Jason. Um, just to remind people of the process, so Sydney Angels runs the investment process and sourcing and due diligence across deals as far as its members. It runs applications throughout the year, but there are six sort of main cycles. Each cycle generally historically has had 30 to 50 companies come in to that cycle. They get reviewed by a committee and deal team. So it's about 12 to 15 people review those. They then filter all those deals down to what they think are the six best investable deals based on the applications. Those six companies then go to a deal screening meeting. Those deal screening meetings consist of a number of committee members and Sydney Angel members. Generally, again, it's about 15 members who come to those. They then see those companies deliver a 10-minute presentation and a 10-minute Q&A session. And then we vote on those companies to see what we think are the best three possible deals out of those. We give them feedback. They improve their pitches and presentations. They go to a full members meeting. They then present again the same 10-minute presentation, 10-minute Q&A. We have a conversation. And then the members basically put their hand up to say, I'm interested in learning more about this particular deal. And it goes into a due diligence process. That DD process normally goes for a couple of months. From the members meeting, and they then start getting invested in. So you'll generally find one to two of those companies will get invested in out of each of those cycles. At December, there was 92 companies in the portfolio. The current number of portfolio, I think, is 98 at the moment. There's been a few more closed right at the end of December, as well as into the new year. Might move on to the next slide. Now, this shows the aggregation of all the history of deals coming through. The blue ones are the ones that have been screened out on application and don't get through. The red, yellow, and green ones are the ones that pitch to a deal screening meeting. The yellow and greens have pitched to a members meeting, and the greens are the ones that have actually been invested in. If you add up all these, you get about 3,000 deals. So there's about 90 companies in total that have been invested. So it's about a 3% success rate. What's really interesting, so far this year, we've had 3 cycles in 2026. Across the 3 cycles in 2026, we've actually had 203 applications that we've assessed. So there's a lot more coming through the funnel, and so we're seeing a lot of really interesting things come through at the moment. Go to the next slide. So we're going to talk about the existing portfolio companies here from date of investment. So we've got iiShield invested in October 25, Merrick Technology December 25, Crosscourt AI December 25, Profitate March 26, Flowganise March 26, and Enaxiom April 26. Next one. So iiShield, I made a comment on LinkedIn the other day that this is probably one of the companies that I'm like most proud or most excited to be associated with an investment in. What they do is they've created what they call is a kidney pajama, which keeps kidneys cool during the transplantation process. People will be very familiar with organs going through transplant where they move from a hospital, the one hospital to another hospital or through the hospital. They're in those like little eskies. So that's great until the point where it comes to time of the surgery. When they get to the time of the surgery, they get pulled out of those cooling devices and they ultimately start heating up because they're not connected to blood supply and they're not being thermally regulated. For a kidney, what actually happens is the optimal temperature for a kidney lasts for about 20 minutes, and beyond 20 minutes, the kidney's at a suboptimal temperature. Now, the average kidney surgery actually takes 40 minutes. So as a result of that, surgeons rush to try to get it implanted. And as a result of that, they make mistakes. So you've got a kidney that's actually declining. You've got surgeons making mistakes as a result of it, and therefore suboptimal outcomes. The team behind iiShield thought, well, why don't we just make like a little ice pack cooler and sort of wrap it around the kidney, and through lots of trial and experimentation and trial and error, created it, have got some funding. So we invested in their first round. They hadn't started their clinical trial at that point in time. They hadn't actually finalized some of the final testing on the devices. Now they've done that. So they've funded that. We helped fund that. Very pleased to announce they've actually completed their clinical trial for 20 kidney transplants. All of them have gone spectacularly well, in fact, better than they expected through that. The median temperature reduction from a core without using it was 21.3 degrees. To using the product is 10.6 degrees. So actually a spectacular outcome. The other thing that they were doing that test for was for FDA approval, which lets them to then sell into the US market and then bring it back to the Australian market. That's quite a long approval cycle, like circa 9 months. Whilst they've been going through and doing the testing, they've also found out that there's another route to get an approval in Canada, which is a much faster approval, which then can be used in the Australian market. So it looks like the opportunity is to accelerate their revenue generation. And now they've also got interest from both hospitals in Australia and US to actually start using it. So this is one of those investments that has like a huge, fantastic outcome potential from what it actually does and actually saves lives. So I think, really excited by the iiShield one. Mary Technology is a legal tech AI product. They quite specialize on what they actually produce, which is they build and help lawyers build chronologies. So in litigation, one of the first things that they've done is actually you look at all the documents and you actually work out what has actually happened and when, and build out the fact position for your business. So Mary did a $7 million round, which was led by OIF Ventures, which is one of the leading early stage venture funds in Australia. We co-invested, the Sidecar Fund co-invested in that round alongside the Angels who had invested in previous rounds as well. They've recently, at the end of last year, they got into the Amazon Web Services AI Accelerator program, which gave them access to significant credits and also links into the US. They've started this business and in about 18 months have gone from 0 to about 2.5 mil in ARR with enterprise sales. It's one of the fastest enterprise sales businesses I've seen come out of Australia in a true enterprise sales perspective. The other interesting thing they do, there's a couple of really large global providers called Harvey and Legora who do more platform offerings. They do a little component of what Mary does. So what they find is large legal firms do what they call a fact-off battle between those two platforms to see who actually performs best. And very pleasing for Mary is every single time they've done it against any of those major providers with major legal firms, they've always won those battles. The product is phenomenally better than those other competing platforms, which is really great to see. It's not on here, but they're growing at a rate that the current target for the business is to get to by December this year. They're targeting 10 million in ARR for that, which will then give them a solid launch to do their next capital raise into the US, ideally at a substantially marked up premium to what we've actually invested in. Go to the next slide. Next one we invested in was Crosscourt AI. As you can tell from the name, it's AI. What you can't tell from the name is it's got nothing to do with tennis. It actually does stuff for the real estate investment sector, being private credit and property investors. What they effectively do is take the work that an analyst would do in preparing an investment committee paper or reporting through on existing investments. And that analyst would historically take a week to do that sort of first cut of a paper. What the Crosscourt AI platform called Harper does about 80% of what that analyst needs to do and does that in about anywhere between half an hour and an hour, which then enables the analyst to finish it off and get through faster through that process. So it substantially increases the ability for them to review and consider deals. It also takes a substantial amount of the governance and compliance reporting they need to do for existing investors and for ASIC and automates components of that. So when we invested, they sort of then went into the StartMate accelerator. They pretty much had nominal revenues. We're sort of talking $10,000 a year worth of revenues. Through that program, they've focused on really growing it. They've signed $150,000 worth of contracts over the last 6 weeks with major real estate investor funds. They've been to the US, to San Francisco, through that StartMate program, met a lot of companies and investors there. Launched an update to their product with substantial new features and enhancements, and they're about to launch a new capital raise around, which we're expecting will be a reasonable markup to the investment that we've sort of went in about 6 months ago. Next one there's Profitate. It's a more recent investment, so it's actually only a small update from when we first invested. But importantly, in April, they cracked 50,000 in monthly recurring revenue, which is the equivalent of $600,000 a year in revenues. They acquired 13 new customers, so starting to pick up their customer acquisition. Launched a really important new feature, which is a HubSpot integration, which means they open up a mid-market opportunity, which substantially increases their potential customers. One of the problems they've had in the early days as they've been launching the product is the churn has definitely been higher than they wanted in that, which means, you know, of those new customers, some of those customers have to replace existing customers who have disappeared, plus build new customers. So if you can reduce churn, obviously you can ultimately grow faster because you're not losing as many customers. Their initial views and response from that over the last recent weeks believe they should be able to halve their controllable churn, which is actually a great impact for the business. The thing we loved about Profitate and in investing is it was run very lean, off a very, very low capital raise, and he actually used his own product to build and acquire his customers. And what this does is sort of does an outreach program for sales development reps to find customers, and it monitors things online, articles, socials, and then generates contextual triggers for the sales development reps to actually reach out and actually draft those emails. And he tells some of the story around customers saying, I'd love to see a demo of the platform and experience what it looks like. And he basically tells them, well, you have, because the very first email that went to you was actually drafted by the platform. This is what triggered it. And they've ultimately been engaging with the platform through it, which goes a long way to helping them get across the line. Next one. Flowganise, another AI influenced one. These guys do what's called conversion rate optimization, which is basically if you think about an e-commerce or any kind of website where they're selling something, one of the biggest issues with startups and small businesses is they lose revenue because their websites under convert. They're just losing things, items in the wrong spots, wrong colored buttons, wrong flows and user experience. To solve this thing, historically, you've needed to use a consultant. Most people can't afford it. Decent consultancies in this area cost about $150,000. What Flowganise have done is automate and take a lot of that stuff that was done previously by people and get the system to do it. So they actually make it available at a much lower price. And their pricing is varies between 8,500 per annum at the lower end to about 18,000 per annum at the upper end for that. So that opens up a really large cohort of customers. So you think about Shopify has something like 1 million customers who have Shopify stores. Of those million customers, 990,000 of them can't afford the $150,000 consulting, but the vast majority of them can afford 8,500 or $18,000 per annum to improve their conversion rate. So that's the market it's tapping into. They've been accepted into the StartMate Launch Club, which is a good sign to the StartMate program because you've got a higher propensity if you come out of the Launch Club to go into the Accelerator program, which is what Crosscourt did. So they went through that same process. They're also about to launch a capital raise as well, again at a premium to what we've done based on their traction. And then our most recent one, which is a very new one, we've sort of only had about a month since we've made the investment, but Enaxiom. And we went into this round. So they closed a $1.8 million seed round, which we invested in with the Angels. That was triggered by the completion of their initial feasibility study on a 40 kilowatt pilot plant. What Enaxiom actually does is they have a product called HydroCool, which is a cooling system which is used for data centers, very much focused on AI data centers and high performance data centers. People are probably aware that one of the biggest issues with data centers is two key concerns, which is the amount of energy that they require and consume, and then the water that they consume as part of the cooling process, because these servers and processes generate significant amounts of heat. A HydroCool system addresses mainly that waste heat that comes from servers and cooling it down, and actually has a system that rather than use potable water, actually can use effectively dirty water, and through the cooling process, purify it and actually turn it into ultra pure water, which can then be sold as a byproduct. So it becomes revenue generating and producing of water rather than consuming of water. And it also does that with substantially lower energies, therefore addresses the energy concern. So this is a technology that came out of the mining industry originally. A lot of research and dollars that went in from BHP previously, but has been sort of pivoted across to the data center, which is really interesting. They've now taken the seed round closing, put new personnel on to help with the engineering and actually the scaling up and then the commercialization strategy. They've also built a really significant pipeline of opportunities across 15 organizations. And this is across Australia, Asia, and the US market. And they're going to continue to work through that development. The next major milestone is in September when they should commission their 40 kilowatt commercial system. So it's the commercial version of their pilot plant. They then do testing, and then that 40 kilowatt version scales up from 40 kilowatts to a couple hundred kilowatts, and ultimately up towards 1 megawatt process. So this is an investment that's got massive tailwinds. We also like the opportunity that they can do the product themselves into data centers and also retrofit them into data centers, but they can also elect to license the technology out to other providers as well. So there's a couple of revenue opportunities through that. That's the portfolio. It's a quick and fast update. I'm happy to take any questions that we've got. I don't think no one's actually asked any questions yet, so feel free to jump in and put some questions up. I'm happy to sort of talk about the fund, the portfolio companies, the process, any aspect of that at all.
What I might do is I've got a couple of polls actually to launch while people are thinking about some questions they might want to ask. So I've got two polls. The first one that I'll pop, I'll leave it up for a few minutes, is the one that's actually for existing investors in the fund. So I'll pop that one up first, and then the second one is actually for those that are on the audience here tonight that are actually considering an investment in the fund.
Yeah, great.
Feel free to drop any questions in, everybody, if you have any, or maybe Adrian, from the webinar we held earlier today, we had a lot of questions come through. If you wanted to run through any of those, I know I'm looking at some of the names. I can see we've got a lot of people that are existing investors, but there are those that are not invested yet. That
I've talked to quite a lot of people about the sidecar fund today and had lots of conversations. Do you want to throw some questions? You want to throw a couple of questions at me, and
Sure.
I'll answer them.
I know a couple of people asked earlier about where we are in regards to the unconditional approval for ESVCLP.
Yes. Yep. So at the moment, we've got a conditional approval, which means we've sort of met all the initial thresholds, the investment process, all those things. To get to an unconditional approval, we need to do effectively two things. We basically need to reconfirm the investment process and guide that that's still running and complies with the information we submitted previously. And the second one is we need to get the $10 million committed. Now, at the moment, we're sitting a bit over, I think, $5.5 million, albeit it's changing. I think this week there's been quite a bit that's actually come in this week, so that actually might be getting closer to 6 mil. And I think there's about $1 million in the pipeline for people at sort of various stages of applications. And then there's another group who have said really interested, really keen, but I want to make sure you get to the 10 mil. So tell me when you get to closer to the 10 mil. I think that's about $500,000 sitting on, maybe a little bit more than that on that. And so we've got that now. I've just seen Michael's just asked a question on that. How long do we have to hit the $10 million threshold? We've got to hit it by November, but we need to put the application in by the end of August. There are some things that we can do. We've got some investors potentially interested in larger amounts who would commit as we get closer to it as well. So basically, we've got about, what's that? Rest of July, effectively August. So sort of 3 months before we need to lodge the actual application, but effectively 5 months to hit the actual $10 million number. So just based on what we're seeing through the pipeline, we're pretty confident, we're very confident of getting there. What's really interesting is since the CGT changes in the budget, there's been a huge amount of increased interest. In effect, you've gone from capital gains on the competing investments, only having maximum sort of 23.5% tax or 23.5% tax to now having 47% tax. We're tax free with a tax rebate. That's a far, far greater opportunity from an investment perspective. There are some technical abilities to get some extensions, but they're quite difficult. At this stage, we don't think we're going to need to apply for an extension of the timeline.
Thank you.
There's a quick question there around the next capital call as well, so the second year's commitment. So we've already been investing in the fund and people have made their first calls and commitments. As we get the rest of this one, we think the second call from today will probably be about 6 to 7 months from now, or from whenever we ultimately close it. The next investments, the next calls after that will all generally be about 12 to 15 months after the most recent call. So you'll expect to see the whole thing from ordinarily take about 6.5 years to call all of the money in.
Yeah, thank you, Adrian. Another questions earlier, and I think you might have missed it because in the earlier webinar you talked about the pipeline a little bit, and you close.
Yes.
Yep.
Yeah, so I think the other thing is it's not on this slide, and it's only just happened effectively this week. Is the investment committee has actually approved another investment, so the seventh investment. That is into a company that's almost like it's a crossover between medical and AI, which has got a really, really strong team, some really strong IP in it. It's revenue generating, predominantly in Australia, but it's actually already in 14 countries. So most of those other countries are sort of just the very early stages of tests, but have a lot of interest from the medical community. It's quite a close-knit medical community that talks a lot. So the fact they've actually got that traction quite quickly is really positive to us. So we'd expect to update that probably in about a month to have that updated. Actually, that was one of the other questions that we got earlier, which is like, what's the reporting that comes out of the fund? So there's quarterly reporting on an update on the portfolio, so things that are basically happened in the last quarter. In these initial early stages, we'll also, as we're making investments, we'll be giving an update as we close new investments as well. So people have got updates on the new things going into the portfolios. And if anything major or material happens for a company, we'll also give you updates on that. Now, the socials also get updated on a regular basis, so make sure you follow on the socials. You'll see that stuff. But yeah, there's regular reporting. That actually then led to another question, which was, can you also invest in the companies directly as well? So one of the benefits you get from the fund is you get to watch the earlier stages of the companies effectively passively. If there are any companies there that you really like and you wanted to learn more about, we say, look, let us know if you're interested in investing in them. We can put you in contact with a company. We can't guarantee that you'll get access to those, but there's a strong ability if the company's still looking for capital that you might be able to get into that. There will be some where the only people who will get into that will be existing investors in it. That was the case for the Mary Technology. So it's basically existing investors only, plus the lead, who was the new lead for OIF. I expect the next round for Mary Technology will be done out of the US market at a much higher valuation, a much higher round. The only people who will get into that will be whoever that lead investor is and existing investors. So there'll be no other ability to get into Mary, for example. And I think you'll see that more and more for companies. There's a question. Will the fund get preference in follow-up raise, or for any reason the fund doesn't invest, can an individual do so? So the fund will nearly always get preference rights to invest and follow-on rights into it. It's built into the shareholders agreement. So one of the things that the Sydney Angels Syndicate will negotiate is pro rata rights as part of an investment. That's a part of the standard terms which are there. It's very rare if we don't get those rights. If the fund chooses not to invest, there's no explicit direct right for individuals to invest. Although because of the way we structure the investment via VentureCrowd and the unit, the broader VentureCrowd platform, there is an ability for us to sort of piggyback off the side of it and effectively use the rights across Sydney Angels and the fund for investors if there is shortfall in capacity as well.
Yeah, perfect. And we are running spot on time. If there's no more questions, I'll end that second poll. So good responses on the 2 polls as well. Thank you everybody for for entering that. Appreciate you all taking the time out on your Wednesday evening, and thank you, Adrian, for coming along. As I mentioned earlier, we will be sending a recording out, and again, feel free to share that recording. If you have anybody in your network that you think should take a look at the Sydney Angels Sidecar Fund number 3, then you're welcome to share that with them, and you can give them my details if you want me to provide them with any further information.
Yeah, and Jason, look, I'm always, as you could probably tell, I like talking about the sidecar fund and the startups and investing and angel investing. If anybody wants to reach out and have got other separate questions, more than happy for them to see and reach out to me on LinkedIn. And
or I'll introduce you as well.
Or you can introduce me if they go back via you as well. So
yeah, I do that. I think you spoke to 2 people this afternoon, didn't you?
I did.
Yeah. So we'll always do that. So yeah, I really appreciate your time, Adrian. It's always good to hear your take on these things.
Not a problem. Great.
Have a good evening.
Have a good night. See you. Bye.